Hello there. Have you ever thought about how certain life events can affect your taxes? It's something that a lot of people don't always consider, but it can be really important. I mean, think about it. Getting married, getting divorced, having a baby, losing a spouse, selling your home, retiring, moving to a new state, or maybe starting a new business, changing jobs and going back to school. All of these things can have a big impact on your taxes. And if you're not aware of the tax implications, it could lead to unexpected tax bills or missed opportunities to save on your taxes. So it's a good idea to be aware of how different life events can affect your taxes. If you're curious about how any of these life events could affect your taxes, then you'll want to watch this brief video summary. Hi, I'm Noel Lorenzana, your friendly neighborhood accountant. Let's jump right in. Marriage. When you get married, you have the option to file your taxes jointly with your spouse or separately. If you choose to file jointly, you'll typically have a lower tax bill compared to filing separately. However, you will be responsible for any tax liabilities of your spouse, even if you were not aware of them. It's something to think about. You may have heard about the marriage tax penalty. It's basically when the taxes you pay jointly exceed what you would have paid if each spouse had remained single and filed as single filers. Birth or adoption of a child. If you have a child or adopted child, you may be eligible for the child tax credit, which can reduce your tax bill by up to $2,000 per child. You may also be eligible for the child and dependent care credit, which can help offset the cost of childcare while you work or look for work. There are also adoption credits available. Divorce. If you get divorced, you may need to update your tax filing status, and you may be responsible for paying alimony, which may or may not be tax deductible for the payer and may or may not be taxable income for the recipient. It actually depends on when your divorce was finalized and what year you're actually watching this video. You may also need to divide or split up your tax deductions and credits with your ex-spouse. Claiming dependent children can also get very complicated as well, so keep that in mind. Retirement. When you retire, you may start receiving Social Security benefits, which may be taxable depending on your income level. You may also start taking distributions from your retirement accounts, such as a 401k or IRA, which also may be taxable. It's important to carefully consider the tax implications of your retirement income and plan accordingly. You also need to start thinking about RMDs or required minimum distributions. Selling a home. If you sell your primary residence, you may be able to exclude up to $250,000 in capital gains or $500,000 if you're married and filing jointly from your taxable income, as long as you have owned and lived in the home for at least 2 of the past 5 years. Any gains over the exclusion amount would be taxable. Moving to a new state. If you move to a new state, you may need to file state taxes in both your old and new state for the year in which you move. You may also need to consider the tax implications of any income or assets you have in your new state. Starting a new business. If you start a business, you may be eligible for various tax deductions and tax credits, such as the home office deduction, vehicle mileage deduction, or the self-employment tax deduction. It's important to carefully consider the tax implications of your business, and since it can get complicated, consider consulting with a tax professional to ensure you're taking advantage of all available tax benefits. Going to college. If you attend an eligible educational institution, you may be eligible to claim the American Opportunity Tax Credit, which can reduce your tax bill by up to $2,500 per year for each student. They need to be in your household, pursuing a degree, and meet other requirements. You may also be able to claim the Lifetime Learning Credit, which can reduce your tax bill by up to $2,000 per tax return. Buying a home. If you buy a home, you may be able to claim the mortgage interest deduction, which allows you to deduct the interest you pay on your mortgage from your taxable income. You may also be able to claim property tax deductions. Keep in mind, you can only take advantage of these deductions if your itemized deductions exceed your standard deduction. Changing jobs. If you change jobs, you may have to pay taxes on any severance pay or unemployment benefits you receive. You may also have to pay taxes on any 401k or other retirement account balances in which you withdrew from your old employer. You may also want to consider moving your retirement accounts to a self-directed IRA, and in that case, you'll want to speak with a financial advisor. Starting a business on the side. If you start a side business in addition to your regular job, we call that a side hustle. You may be able to claim various tax deductions related to your side business, such as deducting your business expenses, deducting business use of your personal vehicle, and claiming the home office deduction. You may also need to pay self-employment tax on your side hustle income. It's important to carefully consider the tax implications of your side hustle, and since it can get complicated, talk to a professional to ensure you're taking advantage of all the available tax benefits. If you're going through any of these life events and want to know more about the tax implications, it's a good idea to talk to a tax professional or do some research on your own. Don't let taxes be a surprise. Be proactive and plan ahead to make sure you're in the best financial position. Let me know in the comments if you have any questions. Do check out this video here where I share my best tips on how to find a good tax preparer. If you found the video helpful, please do me a favor and hit the like button and consider subscribing to stay connected. And as always, thanks for watching and see you in the next video.